Welcome back to my channel, ladies and gentlemen. I am so delighted to welcome you once again to my channel. I still remain my humble self, Austin Ikiru, and you all are welcome to my channel, Austino FS, where I talk about forex trading and all the best strategies that you need to be successful in the forex market. So in today's video, we are going to be talking about momentum. Many of you must have heard the word momentum, but you don't understand what it means. Momentum is very important in price action because it tells you the strength of a trend, right? Remember that in forex trading, the market moves up and down, right? That is why we have the structure of the market. Like I said, before you start trading, you need to look at the market structure to know what the market is doing before you can take action, right? So in all my trading strategy, I always use the MAEE formula, right? I use it in combination with other strategies that I include in my arsenal. I use other confluence to give myself confidence while trading. That is why I always believe in my analysis. So in this video, we are going to talk more about momentum. Momentum is a strength of the market, the strength of a market, right? If a market is in an uptrend, a strong momentum will tell you whether to buy or to stay out. And if a market is in a downtrend, a strong momentum will tell you whether to sell or to stay out. And like I said, the market moves in circle. The market goes up, goes down, and range. So it is always advisable to stay away from the market when the market is ranging, because whenever the market is ranging, that market does not have any momentum, right? The market is just going up and down without any concrete direction. So that is why you need to understand this concept known as momentum as a forex trader, because momentum will help you to know when to place your trade and when not to place your trade. Momentum will help you to know when to get in and when to get out. So right now, I'm going to show you some examples so that you understand what momentum is all about. I'm going to share an example with you on the screen. Now look at the screen carefully. You see that previously the market was in a downtrend, right? This is a resistance level and the market was previously in a downtrend. Now if you want to know a momentum of a market, you look at the leg of the trend. Like now that the market is in a downtrend, you can clearly see that there are larger red candles and there are many compared to the green candles. Like if you watch, you see that this red candle is very big, right? But the green candle is small. We have another big red candle, small green candle, big red candle, small green candle. So when you see this type of market, you should know that the market is clearly in a downtrend and the selling momentum is strong. So if you decide to buy in this type of market, you are going to lose so much money. That is why momentum is very important as a trader. You need to understand momentum. So it is very important that you understand momentum and know when it is in the market. Like now, you can see clearly that the market is in a down move. That is why we have larger red candles here. Like I said, this is a large red candle. This is another one. This is another one. This is another one. Right? Then we have smaller candle. Right? We have smaller green candle. You can see the small green candle, the small green candle. And if you watch, you see that the movement of the market is down, right? That is why we say the momentum in this market is strong and the momentum is down. Then suddenly what happened? The momentum changed, right? What happened? The red candle started getting smaller, meaning that the momentum has started getting weaker for the sellers, right? And suddenly the buyers step in, right? So if you watch this long green candle, this tells you that the momentum of the market have changed from selling to buying. So if you see this type of candle, you know that the buyers have stepped into the market. Right now, you see that the trend have changed from downtrend to uptrend, because you can clearly see the green candle are now getting bigger while the red candle are getting smaller. So if you see that this is a green candle, see how large they are, look at it, look at how large they are, right? While the red candle are very, very small. So if you watch clearly, you see that in this market you are meant to buy. If you try to short this market, you are going to lose so much money, because the momentum of the market have changed. The momentum of the trend have changed. You can see that the market is now in a clear uptrend. So you are meant to buy. You see how powerful momentum is. If you understand momentum, if you understand price action, you will know the direction to place a trade. Some traders make the mistake when they see a long green candle, something like this. Now they will see a long green candle. Instead of them to understand that this long green candle means there is a strong buying momentum and they should look for buying opportunity, they will be trying to short this market. They will be trading against the trend. And I always warn you, never to trade against a trend. Once a trend has developed, never you trade against the trend. Always trade in the direction of the trend. That is the only way you make money in the forex market. Don't ever trade against the trend. So this is how momentum works, right? You can see right now that the buyers are clearly in charge of the market. See how they push the market all the way to this point, right? Telling you that the momentum have changed from selling to buying. Let me share another example with you guys. Now if you watch clearly, you see that this is a clear bull momentum. Buyers are in charge of this market, right? So if you are to trade this market, you are only looking to buy, because the momentum is buying and it is a strong momentum. You can see that there are so many green candles here compared to red. If you count, you see that there are so many green candles here compared to the red candle. The red candle are just small, but we have larger green candle, right? This is a green candle, green candle, green candle, green candle, while the red ones are small. So if you identify this type of market, you should know that the direction of the market is up. There's a strong buying pressure in this market. The momentum is buying and it's a strong buying momentum. So when you see this type of market, you are only meant to buy. Some traders will make the mistake of trying to short this market. Maybe if this type of market gets to a resistance level, they will want to play against the trend, not knowing that in a strong trend the market can break so many resistance level. In a strong uptrend, the market can break so many resistance level. That is why when you see a strong up move, always trade in the direction of the trend. Don't try to trade against the trend, because if you do that, you are going to hurt yourself. I'm just telling you based on experience. Now if you look at this again, you see that at the left side we have a strong bullish momentum, right? The price is going up and we have so many green candles compared to the red. Then suddenly the price now made a range here, and then the momentum changed to bearish. Right now we have a strong bearish momentum. You can see the long red candles, and you can see that now the red candles are bigger than the green candles, telling you that the trend have shifted from an uptrend to a downtrend. So if I see the type of market, I will always short the market, because I can clearly see that the market have changed direction. Formerly it was in an uptrend, right? You can see the green candles are bigger than the red candles, and suddenly when the market got to this point, it made a little consolidation and then reverse and started heading down. Now you can clearly see that the momentum is now downtrend. Let me share another example with you guys so that you understand what I'm talking about. Clearly you can see that there is no momentum here. The market is just going up and down. So you can say that the market is clearly in a range. So there's no momentum in this market, right? Neither the buyer nor the seller are in charge. There's just consolidation, right? So if I am to trade this type of market, I will either stay out of the market, or I will place a sell trade at the resistance level or a buy trade at the support level. But it's always advisable to stay away from a ranging market, unless this ranging market is at the higher time frame. Like this type of market is in a daily time frame. You can clearly go to the lower time frame and trade the move. Like in a lower time frame, this can be a trend, right? In a lower time frame, this movement can be a trend, this movement can be a trend, this movement can be a trend, right? If this is a daily time frame, in a 5-minute time frame, this can be a trend, right? So it depends on the time frame you are trading, right? But if this is clearly a 15-minute time frame, I would advise you to stay away from this market because there is no movement, right? If you watch, you see that the upper band and the lower band is too compressed, so you see that there's no volatility in this market. The market is not going anywhere. There's no directional movement. It's just making up and down. So clearly say there is no momentum in this market, right? So you have to understand this concept very well. Now if you look clearly, you see that this market has a strong bearish momentum, right? If you watch, you see that this market has a strong bearish momentum. You can see that the red candles are bigger, larger, and more compared to the green candle, and that is why they are pushing the market down. So if I am to trade this type of market, I will only sell because the momentum is down and there is strong selling pressure in this market. So that is why it is always advisable that you trade in the direction of the trend, right? Whenever you are trading the forex market, always identify a trend, because when you are able to identify a trend, you will be able to trade the market profitably because you already know the direction of the market and you will trade in the direction of that market. And what will help you to identify a direction of the market? The momentum will tell you. Like if you see a market and you see there are so many green compared to the red, you know that there is strong buying pressure in that market. There is a strong bullish momentum and you are only meant to buy. Or if you open your chart and you see so many red candles and so many big red candles compared to green, the green candles are small but the red candles are big, telling you that the momentum is down and you are only meant to sell, right? You see how powerful momentum is. If you understand how to identify a trend, you can use momentum to identify the strength of that trend so that you know whether if you are to join the trend or not. But if the candlestick, let's say it is a downtrend and you were seeing big red candles, then suddenly the big red candle started becoming small. You start seeing small red candle. It means that the momentum is getting weaker. The trend might reverse any moment. So you might want to stay away from the market for you to see a strong momentum before you can hop into the market. So that is why it's very important that you understand momentum very well. Now if you look at this market, some will say, this is a support level, this is a support level, let us buy here. This is a support level, let us buy here, not knowing that a down move has formed. You can see before the market was in an uptrend. You can see that the green candles are larger than the red candles, right? Got to this point, the market then made a consolidation before it shifted momentum. Now there is a strong bearish momentum from here. You can see this long red candle, right? If you watch clearly, you see that there is a strong bullish momentum here. The market is going up, right? You can see the green candles are getting bigger than the red candle. Then suddenly the market got to this point and the momentum became weak. The bullish momentum became weak. You can see the small green candle, and then what happened? We started seeing large red candle. You can see another one, see another one, see another one. Then look at this big gigantic red candlestick, telling you that there is a strong bearish momentum in this market, telling you that the market have shifted from an up move to a down move. So you can see that there is a strong bearish momentum here. You can see that the red candlestick are getting larger compared to the green candle. So some traders will see this and they will say, oh, this is a support level, let's buy this, not knowing that the movement of this market is strong. Then guess what? The market went down again, right? And get to this point, some trader will say, okay, this is a support level, let's buy again. Look at what happened. The market went down again, right? Some trader will say, okay, let's buy again. Look at what happened. The market went down again. Are you seeing it now? The market is clearly going down. So if you are trying to buy, you are wasting your money. no matter the level the market gets to, is still breaking. Is breaking several support level. So if I were you, I will only look at the resistance level, and that is where I should be shorting this market, right? Because if you clearly see, you see that the market is in a down move. There's a strong bearish momentum in the market. The sellers are in charge of the market and they are pushing the market down. So if you watch clearly, some will say this is a support level, let's buy here, let's buy here. Then watch and see what happened. The market went down again. Look at it. The market went down again, right? Some trader will see this again and say, wow, this is a support level, let's buy this, and they will place buy. Look at what happened again. The market went down again. So you see how the market is going down. See how the market is going down. You can see clearly the market is going. This is how the market moves. You don't know when the trend is going to end. So that is why it's advisable that you tread in the direction of the trend. Look at it. See, the market is still going down. The market is still going down. You can see clearly the market is still going down. So if you were to buy this market, you will lose so much money. If care is not taken, you might even blow your account. So that is why it is always advisable that you tread in the direction of the trend. Learn how to identify momentum in a market. Know whether if a market is in an uptrend or downtrend, and know whether if the down move has strong bearish momentum, or if the up move have strong bullish momentum. So I will advise you guys to go to your demo account, backtest this strategy, learn it very well, and if it worked for you, learn it very well. And if it works for you, then you can implement it in your live account. That is all I have for you on today's video. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this. And also, don't forget to turn on the notification icon to be the first to be notified whenever I update new content. I will see you again next week Saturday in my next update. Bye.